Okay, recording this video after close trade Monday, 2nd of March 2015. Hope you had a good day's trading today. So, first of all, apologies for not putting anything up over last week and the weekend. We've had friends staying with us and so I've been rather distracted and didn't do too much trading last week. But back into it this week. And so you'll see a little bit more coming from me over the next few days. So I want to do two things. Talk very briefly about the 1500 tip bar chart today and what was kind of going on, and then I want to talk about bonds because we had some really interesting activity in bonds over the last couple of weeks. I want to run through that just really quickly. So first of all, 1500 tip bar chart here, this continuous contract at ES on TradeStation, and we had a nice little rally first thing in the morning, ran for about 10 points or so, and it's set up into a nice little kind of reversal pattern. So we got an exhaustion on our left shoulder here with a bunch of blue professional bars taking profits here at about 12. We put in our first bearish divergence, which is a good little signal, and then pull back to end of trend. That is a trifecta, kind of looking good, but you've always got to be just a little bit careful. We kind of set off to the downside and then couldn't really get anywhere, and we came back up, pressed above those highs by a quarter point. It wasn't really a stop run trade, but it ended up being a flush pattern there, so flushing out the last of the buyers, all of which is happening kind of nicely just before 11 a.m. in the morning. So it's all looking good for a reversal, but you've got to be careful. You know, some days, we don't have a lot of professional support for a reversal, and today was a classic in that sense. We started off in this downtrend, kind of got going, and then went down to about the 7 level, kind of down here, and there you can see a couple of Rambo patterns on the 1500 tip bar chart. And I keep on saying Rambo on the 1500 tip bar chart is really important, and what that's showing me is that the amateurs at that point are driving the move. They're seeing all of their moving averages roll over, MACDs showing them to go short and whatever, and they're driving the move and they get wrong-footed, and we have to wait a little bit of a while to figure out what's actually going to happen. So we put in another set of Rambo patterns at the top here, and that's a Rambo to Rambo channel. So that's showing that the amateurs are just kind of buying a breakout there, shorting it kind of down here, a little bit confused, and you can see we have some blue professional bars that start to break away into a trending move. They come back and test, pick it up, support holds, blue professional bar, that one's the critical one at 2109, and then bang, we race away and close at the highs, having popped some stops kind of above here with that kind of exhaustion activity and blue professional bars at the end of the day. So it's kind of a failed reversal day, but that was your clue. When we get a couple of Rambo patterns kind of going the other way, it's a little bit suspect, so just kind of jump out and just wait and see if there's going to be a strong kind of continuation move that way. And we didn't get it. It kind of reversed and broke to new highs. So I missed this uptrend because I was still in my bed. I was still kind of sleeping, but my first trade was initially short here. Dumped that one with a 3/4 point loss and then went long on this little move here, pulled out a point after that, so I'm sitting kind of break even at that point, and started to go short here at 10 1/4. So it took out 2 3/4 on this move down, but as soon as the Rambo patterns kind of came in, I jumped out and I was done for the day. Didn't trade this kind of break to new highs here, but that would have been the sensible thing to do when that support kind of comes in with that blue professional bar, and as soon as we start looking as if that's a little gathering pattern waiting to go above previous high, break to new highs, then there was another nice little couple of points on the way up here that were fairly easy. So there we go, that's the 1500 tip bar chart. But what I want to talk about today is the bonds, because the bonds were really interesting. And this is kind of a longer term picture looking at the daily and the weekly chart. Do the 30-year bond contract first, so that's at US for the continuous contract in TradeStation, and just show you what's been going on here. So obviously we've had this monster mega kind of move in the bonds, and shorting bonds has not been the smart thing to do. But we have a little bit of an opportunity here where we could sell off a little bit in bonds, and I'll just show you what I'm seeing on my charts. So on the daily chart here, you can see we had this really weird move back in October. It was like a flash crash in bonds, and that blue professional bar, the high of that one, has really been controlling the whole picture here. The level at that point has been really critical. When we came back and tried to break through that again, this activity was all stop run activity above there, because that was such a critical kind of price point. We formed pullback to end of trend, whole bunch, nice little sequence of blue professional bars at the highs, kind of taking profits. Weak double top there, less buying going on, bearish divergence kind of sets in, and then we head off in the opposite direction. Now, we know the market's weak because we've crashed through support. All the supports, if we look back over here, supports held, we just bounced straight off it. Same thing here, 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 and so on. This is the first support level on the daily chart where we played with the lows and gone through them, and that shows the market is weak. And then on this retrace back up, we've had blue professional up bars here that have now been broken on the lows. So that shows that on that retrace, the pros were probably getting short. And we've had a little bit of an exhaustion buy pattern there. It's kind of compressed in terms of range, so a little bit of churning happening there as they were kind of selling that retrace into that move. And now that we've moved below the low of that blue professional bar and closed below the low of that sequence there looked like that was an opportunity for the pros to kind of get out on that little bit of strength. Now, it happens to be a Rambo pattern on the 30-year bonds. It's not a Rambo pattern on the other kind of bond charts. So it's a little bit weak in as much as it's being driven by the amateurs at that point. But in the background, what we have on the weekly chart is we've had exhaustion buy again at that kind of point back in October, and then the high was marked by a first bearish divergence signal kind of coming in there. So we've had a little bit of a blow-off activity, and this activity this retrace last week ended up being a blue professional up bar that we're now closing the lows off. So not suggesting that it's kind of a strong, the bonds have topped out and we're going into a downtrend, blah blah blah. I mean, that'd be I'm not sure that's the case, but this would suggest we're going to have some weakness in bonds for a little while. So that's going to be an important kind of turning point. The same type of pattern can be seen in the other bonds. So you can look at the 30-year, the 10-year, same deal. With the daily chart, you can see here this last little retrace, we're kind of breaking the lows of that blue professional bar there, or coming back down. It's not closed below the low of that blue professional bar, but that's kind of significant. Same deal, exhaustion buy, bearish divergence. Not as pretty in terms of a pullback to end of trend type patterns and so on, but this activity has shown that we've just blown off a little bit and we're coming back down, and that could well be a little retrace there where the professionals were shorting it, and now breaking below the lows of that blue professional bar will be critical, taking us into a little trending move on the way down. 5-year, same type of picture. Blue professional up bars here, one on the weekly chart with last week's activity after exhaustion, bearish divergence. This has been like a complex correction on the way up on the 5-year chart. So support resistance just been playing up and down between those. And so at some point we'll have some kind of trending break there. Again, the close is not below the low of those blue professional bars, but it's looking really interesting. So look at bonds over the next few days and weeks to see what's kind of going on there. And this might be an interesting way of looking at this kind of setup. Now, this will look like rubbish on this little kind of screen recording size here, but let me just explain what's going on. You can look at the bond prices, or you can look at the interest rates. And so what I tend to do is I plot 3 interest rates, the 5-year, the 10-year, and the 30-year side by side with a daily, a weekly, and a monthly chart. And what I plot on there is beta sine wave. And so you can start to see, just like price moves in cycles and trends, rates move in cycles and trends. So what we're seeing on the daily charts here is that we've had some bottoming activity. This is the 5-year, and that was that kind of October flash crash kind of number down there. We've come back and tested into that lows, at 1.2% down here. Nice little double bottom pattern, holds at cyclical support, and now what we're doing is we're breaking above resistance here on the 5-year chart. So potentially into a trending move up in rates in the 5-year, which would mean bonds moving at a trend move down. And then the same daily chart, this is the 10-year picture here. Again, this is this kind of October flash crash type thing. We did move below to new lows here, down to 1.7%, but we backed off, and now we're breaking above resistance here, potentially into a little trending move on the daily chart of 10-year rates. And then lastly, this is the 30-year going on here, and this hasn't made a pullback to end of trend. We've got a little bit of time to run in terms of cyclical support kind of coming in there. So whether that kind of plays out and just sits around there for a couple of days before completing with a nice pullback to end of trend pattern, or it just kind of breaks through that resistance into a trendy move on the way up. Again, 2.6. So all of that with the bonds kind of potentially running into a little bit of a trending move on the way down would mean there's some strength expectation of rates. And really this is kind of playing off Yellen's kind of comments last week with FOMC and notes and stuff kind of coming out that there's an expectation of a rise in rates. But it's not confirmed quite yet because we haven't closed below those lows on the 10-year and the 5-year, and this happens to be a Rambo pattern on the way down. So I'm going to be waiting and seeing just to see what happens, but potentially rates could see some strength, and then we could see the bond market kind of sell off. Now, quite some time ago I talked about a relationship between bonds and equities where there's about a 20-day lag between bonds and equities, you know, kind of topping out. And so we've had this topping out pattern. I wonder how many days that was ago, but there tends to be a little bit of a move between bonds and equities with a lag. So let's see what equities kind of does over the next couple of days. So there we go, bond chart, which I've not kind of looked at for quite some time, but interesting activity with today's move. Anyway, so I hope your trading is going well and enjoy the rest of the week.